There's been plenty of volatility in the week just gone for US tech earnings in particular, driven crucially not by earnings within the US, but instead the likes of ASML on Tuesday with leaked earnings that saw dour demand. It pointed towards potential weakness in the AI story. And we saw downside for the likes of NVIDIA and many of the other semiconductor giants. But then on Thursday, we saw TSMC coming out of Taiwan, that manufacturing giant, also a supplier to Apple and to NVIDIA, beating across the board and also bumping up their forecasts looking forward. So all is well on the tech side, apparently. Well, looking ahead, we've got plenty to look out for in the week ahead. We've got the likes of Tesla heading up the Mag 7 names, but we've also got the likes of T-Mobile and Boeing, and those are the three stocks I'm going to be looking out for the week starting Monday, the 21st of October. So let's jump into it. This is the outlook for Tesla. And certainly if, we look at things from a wider perspective, what we can see here is that essentially on an annual basis, so these are annual metrics in terms of previous figures, but also the outlook is going to be really key here. What we can see that the expectation is for this year is that 2024, we're going to see significantly lower earnings. That comes despite the fact there's an expectation that we'll see higher revenues. And so this really highlights the battle that is underway when it comes to Tesla. In China in particular, they've of course been fighting against many different companies over there. And this price war that's been underway in the region really has dented the margins, hence higher revenues, but lower earnings. And that lack of profitability could hurt them in the near term. But if you look further out, there is an expectation in 2025, 2026, we see this pick up in a big way. Of course, recently we did see this robotaxi event, sharp declines in terms of the share price, as some people were relatively underwhelmed. We saw the cybercab, the van. We also saw the Optimus robot. Well, it turns out that the autonomous driving for the car was not so autonomous. We saw the Optimus robot that was apparently remote controlled. And we just saw a lack of detail for much of it. The cybercab is expected to go into production by 2027. But certainly if there's one thing that Elon Musk has done in the past is sort of let people down when it comes to timelines. So you can't necessarily hang your hat on that. People, of course, will be looking out for demand and orders within this data. But certainly, hopefully for shareholders, this marks the pickup, the opportunity for them to pick up, because it's been a bit of a tough time off the back of that announcement. Now, looking at the quarterly figures, we're expecting to see 60 cents on the EPS figure, 25.4 billion on the revenues number. You can see in terms of revenues looking forward in the forthcoming quarters, not necessarily looking for a massive pickup, but up towards the sort of 28 billion for Q2 of 2025. Now, if you look at the previous performance in terms of revenues and earnings, they have missed pretty regularly. If you look at the last 4 quarters, just the one revenue beat and the rest of it was a miss across earnings and revenue. So we haven't necessarily got a company that's on particularly good form at the moment, so to speak. Like I said, there is an expectation that we will gradually see earnings per share pick up. And certainly when we're looking here in terms of 2024, that's supposed to be the bottom. Well, crucially, the bottom in terms of earnings per share should have been Q1. If you look at it here, 45 cents, then 52 cents in Q2. Expecting 60 cents here, then 66, 72, 82. So are we going to continue on that upward trajectory? That's really going to be key as we go forward for this company, because certainly if you look at the products when it comes to the self-driving cars, when it comes to the Optimus robot, the potential for them to make huge revenues is massive. They're not just coming out with your ordinary cars. They're coming out with new products that people will potentially spend big money on. And certainly that's something that Elon Musk has been saying. He sees the Optimus robot as potentially their biggest product. Whether that comes to fruition or not remains to be seen. Now, this is the share price in terms of the weekly time frame. You can see that sharp decline that's happened of late. Now, if we look in terms of the move towards the downside, it comes within a symmetrical triangle. Now, you might say it's not particularly symmetrical because the slant of these two slopes are definitely not entirely equal, but nonetheless, we have higher lows and lower highs in play. So the pullback that we're seeing at the moment has the potential to provide a buying opportunity. Will that come to fruition? Is that how it's going to play out? Well, at the moment, I would say we're caught within a potential retracement of this wider move here. So we're looking out for potential Fibonacci support. And we've come slap bang onto the 61.8, tagged it, and now we're in consolidation mode. Now, you might look in terms of near-term price action and say, well, this is just a flag formation. It's a pause before we see another leg lower. And certainly that is a possibility. But if you look in terms of the share price from a wider context, we're in this sort of symmetrical triangle formation. We've got this creation of high low. So there is a possibility that we start to base out around this area of potential trendline support, because of course we've only got two touches, but also that 61.8. So that confluence of support is really key as we move into these earnings. So for me, I'd really want to look out for whether this ends up being a flag and a continuation pattern following this big breakdown, or whether we start to base out as we come into Wednesday's earnings for Tesla. In terms of the next stock to watch, we're going to be looking out for Boeing. Now, Boeing has been unloved to say the least. I mean, this is a company that's been hit hard over the years, and you can sort of list the issues that they've had to contend with. Of course, not least the COVID pandemic, and they essentially just shut the skies. So, companies like Boeing certainly weren't selling many new planes, and certainly weren't in a position where they were taking new orders. We saw the grounding of the 737 MAX 7. We've also seen a series of 787 Dreamliner issues since, which really do point towards potential weakness in terms of their processes in-house. We've now seen a huge amount of strikes underway within the company. We're talking about 33,000 workers on strike since September, asking for a 40% pay rise over the course of 4 years. Now, just this week, they've announced plans to cut 17,000 jobs. Announced that on Monday, alongside a new delay to the 777X jetliner and ending the civil 767 Freightliner production. So not necessarily a huge amount of great news. Now, what might be good news? Well, you could take this as good news or bad news, depending on who you are, but we've seen reports coming out of a $10 billion equity raise. Now, this comes in the face of net debt of around $35 to $40 billion. Now, to some people, the idea of such a huge equity raise is awful news because it dilutes your shareholding. On the flip side of it, it means that they're in a little bit more of a comfortable position. If they have the ability to raise that cash, then they're not necessarily in as much of a dire financial situation. But certainly the company has really struggled to move away from this period where they've seen prolonged shutdowns. It's in the grounding of the 737 MAX 7. We've seen COVID, the Dreamliner issues. There's so much going on that this company has been beat down in a bad way. Now, let's look at how things are shaping up in terms of their outlook and performance thus far in terms of earnings and in terms of revenues. So what have we seen? Well, you can see exactly how bad things have got, right? Because you can see 2019, 2020, 2021, 2022, and 2023, we've seen negative earnings per share. So essentially taking losses. There's an expectation that we see it once again this year, and it's going to be even worse, right? Down 12.07 on the EPS figure for the year, but this could mark the bottom. Right, so there's some light at the end of the tunnel. Now, in terms of revenues, you can see revenues expected to again base out this year and moving upwards from here on in. And then if we're looking on the quarter-on-quarter basis, expectations that this time around it's going to be awful, minus 7.87 for the quarter. So potential for an awful quarter here for Boeing, but revenues expected to move towards the upside. They're potentially going to take a loss and a settlement. And then we look forward and you say, okay, well, Q1 of 2025, they're moving to profitability on an EPS stage, and then we build up from there. Now, whether this is the bottom for the share price remains to be seen. It's kind of like catching a falling knife, quite frankly. And so, when we look at this chart, you're going to see that ultimately we're talking about a company that really has been struggling and continues to struggle. Now, this is the weekly time frame. You can see here that the long-term trajectory saw a great period leading up to COVID. That crash, tried to regain ground, lost pretty much all of it, tried to regain ground, lost pretty much, most of it. But you can see at the bottom end of this that maybe there's some hope in sight, right? Because you've got these deep retracements, very deep. But we are kind of making high lows. The current level is at this 76.4 fib, right? So have we just come into another area where we're going to base out? Are we going to see some sort of bumper announcement this time around? I can't see what it will be. But this $10 billion equity raise, maybe that's something the markets might take as a positive. I feel like it's a coin toss as to exactly how markets are going to take it, quite frankly. Nonetheless, if you look on a near-term basis, we've got a very clearly defined downtrend in play. The latest rally has taken us up towards this near-term swing high, which is up here. It's not there. It's here. Oh, there we go. 158.75, right? So a break through that level does point towards a wider rebound into a retracement of the sell-off from 180. And until that happens, of course, we still have this downtrend in play for Boeing. And finally, let's talk about T-Mobile. T-Mobile may not necessarily seem like the most entertaining company. I would say that if there's an interesting story behind some of these stocks, Tesla's one of them. We're talking about robots and self-driving cars. When you're talking about Boeing, we're talking about plane crashes and COVID and all sorts, strikes. And then we start talking about T-Mobile, and we're just talking about a very consistent performer, a company that has managed to really build up its earnings in a big way of late. The migration towards 5G technology has benefited them. They've said that they've had a particularly good time with the iPhone 16 series, outperforming the previous year's phone range. They've hiked prices and they've introduced a more premium service, so they should be able to improve their per user revenues. And they've also built up the broadband market. Now, that's all great, right? So everything seems to be ticking along very nicely. But ultimately, the most interesting thing about this company is its share price. Because if you look at the trajectory that we're seeing in terms of earnings per share, how it's been going and how it's expected to go, you're looking at a very stable company. You don't see the same kind of fluctuations that we're seeing on some of those previous charts. And then look at the share price itself. Here is the daily time frame for T-Mobile. I mean, it's beautiful, right? It just continues to go up and up and up. And so if I go to the monthly time frame, it probably looks even better, right? I mean, it's just the increase we're seeing over recent months is incredible. This dramatic ramping up of the gains. If you look at 2024 thus far, you're looking at, we entered it at 160, we're now at 222, and you can see whilst we saw a little bit of consolidation, every single candle is green this year. So this is a great company to be looking at when you're talking about trends, right? We've got a very clear-cut trend here, and you'll be sort of hard fought trying to find the pause within that trend, so to speak. You can see these tentative pullbacks, so it's tradable on a sort of intraday basis. And therefore, if we see a near-term pullback, you'd be looking out for this swing low around 216.36 and possible to get into play around that area. But ultimately, this is an incredible performer over the course of this year in particular, but really over the years. And these are the kind of charts that I think